Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market, which had performance actually very tricky in recent few weeks. So, as usual, in the weekly report, we have taken in-depth view on the fundamental background. It was really great discussion concerning the longer-term perspective of the gold market. And if you're interested in investment in the gold market, we suggest that you read it because there we shed some light on longer-term situation, and in two words speaking, we come to conclusion that with the factors and the market analysis from the big whales such as PIMCO, for instance, the Fathom Consulting as well, we come to the conclusion that the overall action that we have currently, it might be not the starting of the big bearish trend, but just retracement before upward continuation. But this perspective stands really long term. It's more than a year and maybe two, while in the short term perspective for gold definitely has a few headwinds from the central bank policies, overall market behavior, statistics, and as well. So at the same time, even in the shorter term, overall situation tells us that we should be more gently with the signs that we have here and keep mind flexible and let mind to pay attention and accept possible bullish signs that we have to not deny it just blindly. So for example, currently on Friday, if you remember, we've got the bearish price action that we actually would like to get. We said that market will be bearish, market will drop below the recent lows and drop out of the consolidation where it stands. That led market to drop lower to the 1760, next support area. So at least this is first target that we intend to consider if the drop will happen. And indeed, drop has happened based on the consumer spendings. It was really outstanding and market just dropped out. At the same time, in the next week, there are a lot of external driving factors stands in the market, which is the Bank of England meeting first, and then the Fed on Thursday. Concerning the Fed, although many people think that once tapering will be announced, market should reverse because they will start to close position on the fact rather than to reverse that was taken based on the rumors. We disagree. We think that the tapering announcement already priced in totally, and all the positions that have been taken based on it's already booked a profit. Besides, I would like to say that the tapering is priced in for a whole period of tapering, if it will go with the gradual pace. So there are some outliers from this pace, either in the slowing side or in acceleration side, is not priced in, but the overall tapering of the whole quantitative easing program is already priced in. So it means that from the bullish point of view, gold could get the advantage in two moments, speaking on the external factors. First, if Bank of England will track its trail and set the reverse with no action with the interest rate hike on Wednesday. If they will not change the interest rate, that will be relatively supportive to the gold probably. Second, if Fed will be really poor for any hawkish rhetoric. So these factors, because what Fed will tell about the economy and what forecasts what expectations they will show on press conference, that will be the major driving factor, not the tapering announcement. So all these two factors could support gold in nearest term. Speaking on the technical side, well guys, it's a really very tricky moment, because here on the FX choice chart we have the bullish grabber that suggests upper direction taken out of the stop, right at the major support area 1778. At the same time, if we'll check the futures price on the comics for grabber, you will not get it. So on the futures price we don't have the grabber. That's why it is most a tricky moment for a bullish stop here. So that being said, those of you who would like to take the long position and think that Bank of England will not change the rate and Fed will keep its gradual view on the economy without any hawkish statement, well, you could consider taking the long position with the stops below the grabber lows. So this is stuff for the bulls. Additionally, what I would like to say is that this week, guys, it was a really surprising change in the sentiment on the gold. So if you'll take a look at the recent CFTC report, you will see that net position has jumped almost for 10%. So this is extraordinary jump, and it was really based on some either inside knowledge or something, or market is preparing to something, because it was really outstanding jump. With open interest, it was more than the 56,000 contracts. So this is very big amount of the positions, and big amount of the long positions have been taken. This is still real for me. I do not know exactly what the reason was for that. Maybe it's just not the public information. It's difficult to say. Maybe big banks only know about that, or they are preparing something. But this is the fact, and this could be the hidden factor for the bulls. This is what we have on the bullish side. On the bearish side, technically everything looks very logical. So take a look at the fall time from chart. Market collapsed. Next destination point is supposed to be around 1760. This is next FIB support level. The target of the divergence stands below the C point, so market should erase, because they know the divergence target stands between the tops to the lows right here. And it's approximately the same level as the 1760 support, so it's mostly coincide. This should happen in the case of the downward direction. Correspondingly, if we will hear more bearish, hawkish rhetoric from the Fed, and if Bank of England start rising rate, that will be negative to the gold, and that supports bears and triggers downward action here. From a technical point of view, for position taken on the short side, we could consider two levels. First is 1790. Next is vital point is 18 even. Because 18 even is, first of all, the broken line of the consolidation that we have here, this one. And this also 618 resistance. So if market resistance bearish after the collapse that we've got on Friday, it in no way should take out of this resistance. This resistance has to stay. If somehow market breaks above, erase the Friday drop, return back in the consolidation, that definitely is not bearish price behavior, and in this case we should be ready for challenging on the top and moving higher. That's why this will be invalidation point. Correspondingly, some ABCD kiss goodbye of this level, of this line. It will be the perfect scenario, getting the guardians triple to sell here for taking the position. XOP, by the way, stands right at the same area 1759, which agrees with this support. So that's the short-term stop that we have. Technically, everything looks logical, but again, external factors could intrude and change the situation. So once again, the trading process of the gold next week probably will be tricky.